If you take every major economy in the world, they have been growing. They have been in economic recovery. They are growing right now, and they're forecast to continue to grow. The world's fastest growing economies are also the most populous. So think how that is changing consumer markets and the face of business when you have billions of people literally entering a lower middle class and then hopefully ultimately a middle class because the most populous nations, and this isn't just a one-year thing. In the case of China, this has been going on for 30 years. India for 20 years. Rapid economic growth. World adding 100 people every 45 seconds, 70 million people a year over the next 20 years, 97% of them out in the emerging markets. But this is why I'm bullish about commodities and stocks that can participate, companies that can participate in global growth. 1.4 billion more people in the next 20 years. Some of them will be dirt poor, like in parts of Africa. But Africa also has some of the world's fastest growing economies. Ghana, Angola, Botswana, Nigeria, as we saw, which is the biggest population, is growing. But India and China, tremendous, tremendous growth of population and economies. So it's that double force. These are the emerging markets, as we call them in finance. These are the advanced nations. And it just so happens that last year, the year before, and projected, every emerging market economy will grow faster than all the advanced economies. The only one that didn't grow in 2011 is Japan. It's going to be about zero, but that's because of the tsunami, of course, and then the shutdown of so many things. But do you know it's right now the fastest growing advanced economy on earth? Because they're rebuilding. And of course that's also helping our manufacturing because we're so tied into a global supply chain with them. It was hard for us to produce cars without some of the components. Production's going up fairly rapidly, about 5–6% a year. So this is a crucial point about the U.S. economy and what could save our economy going forward. And this is how Europe gets in the game, for instance, when we look at our economy. What is driving the recovery of our manufacturing? Exports. Very good. Our long-term growth rate, our so-called potential growth, is closer to 3%. What's very interesting about that is you have to grow at kind of your long-term potential in order to keep your unemployment rate just flat. Imports in black of goods. Goods are manufactured goods or commodities. We obviously import more goods than we export. I put exports in green because that's when we sell stuff and earn cash, earn green cash. I started in 2004. So things are looking good. We're exporting a lot because the emerging markets are booming. Canada and Australia are doing well. They're all buying more from us. Even Europe's doing pretty well. But we're booming. We have this housing boom, for instance, and we're feeling good about ourselves. Our stock market is going up. We think we have a lot of equity in our home. We take out a second mortgage and import a Jaguar or BMW. And what we do is we have a huge trade deficit, right? Because we're buying more than we're selling, we're importing more than we're exporting. But this is the largest trade deficit in the history of the world in the winter of 2007, 2008. What I try to tell people, though, is we were becoming more competitive, and our quality was getting better, but also the dollar had already been falling because people would look at that trade deficit and also our government deficit and think, this is a country that could be in fundamental problems. It's interesting, they kind of anticipated this next week, so the dollar had already been falling. Astute people in finance were saying, this country's going to have debt problems, why would I hold its currency? But that helped lead to this export boom. And when we bought oil, it was at 1/4 of the price of the 140 it had hit. So if you see the black, it plunges. Our imports come way down. What's important about that is many other countries went into recession, Depression. They weren't as rich, so that curtailed our exports. The green comes down, but the black comes down much faster. Our trade deficit gets cut in half. That is one of the few good things that got our economy growing again. Now our trade deficit is expanding. We're now selling like we've never sold before. Record highs, even of manufactured goods and some commodities. We sell, of course, more agricultural commodities. We basically feed the world, and that price has gone up of agricultural commodities, which is why farmland prices have gone up so much. Parts of the world are booming. They're getting richer. They're going into the middle class. They can buy more. We have some good stuff. Why is Apple doing so well? All of a sudden, people in these nations are getting rich enough to buy first an iPhone, and some are even buying iPads, which is why their stock price just hit 400. If you look at exports of services, the orange, we actually always have a surplus. We always have more exports of services than imports. You lead the world in what you do. Universities, we obviously get many more students in from around the world than send them out. Again, over 40% of my students at a very expensive private business school, private university, come from overseas. That's a tremendous amount of tuition coming in. Every time I teach, I'm exporting. Isn't that interesting? Every time I teach, I'm exporting. This is a place where we not only have a surplus, but you don't even need particularly good eyes. Every month, we're hitting a what? A new high in exports of services. This is the globalization of service industries. The U.S., after 205 years of change in debt equal deficit, deficits over 205 years were so small it added up to our first 1 trillion. We hit 14.3 trillion. We will hit 18 trillion, just a matter of how much pain, and will it keep going up after that. The current forecast, again, out of the best forecasting service overseas, as they look in, is that our debt rise will slow down. Our deficit rise will slow down, as I showed you. If our economy grows, the ratio of debt to GDP, the green line, might finally cap off. It's going to hit 100%, which is pathetic. But if you can get your deficit under control, even if your debt grows a little bit, if your income can grow, what's important when you go to get a mortgage is the ratio, right? Your debt or your debt servicing, if they're going to give you the mortgage, compared to your income. There is no hope for the U.S. if we don't grow our economy. So that has to be job one.